What's going on, everyone, and welcome back to a special edition of the Mortgage Heroes Podcast. I'm Brian.
And I'm Will.
And today, as you see, we don't have Andy here. He's out probably searching for some data and some numbers out in Florida, so we'll have him back on next week's show. But today, we have a jam-packed show, just Will and I, as we discuss the VA loan, one of the most mystical, most, best loans out in the market, and we're going to go ahead and debunk a whole bunch of myths. We're going to get into some details and some success stories of our clients' past experiences with the VA loan and how you guys can take advantage of this great product and go out there and just take it to another level.
That's it. Andy's actually, he told us that it's cold in Florida.
Yeah.
So it was like 36 degrees.
36 degrees in Florida.
Come on. What's going on over there?
I thought over there was all good weather. Key lime pie, the Keys, the
That's
beach.
Key West.
Oh,
Key West. Known for the key lime pie, right, guys? I mean, right?
That's where I got it from.
Yeah. Okay. There we go.
Anyways, guys, so let's go ahead and get jumped into today's show. We have a lot of stuff to cover, but I want to get started with some of the just most basic, questions that a lot of people don't have the answers to, Will. So let's jump right into it, man.
You know what, Brian? I'm actually excited that we're talking about some of this stuff because normally you have to go to like a first-time buyer home seminar or something like that to get this information. But here we just want to give some ideas of people what they can and cannot do, etc. Really not the cannot do's because there's so much that you can do with the VA, right?
Exactly, 100%. And we just want to share this information so that you guys can go ahead and, take that and be reinforced when you're out shopping for houses.
That's it. And we love our military. Thank you guys for everything that you guys do for our country and for us. Here we are because of you.
100%. All right, so let's get right into it.
Let's go.
One of the first questions that I have here, and I know it might be very simple, but a lot of people don't know the answer. Who is eligible for a VA loan, Will?
Whoa. Trick question. Are you trying to trick me?
It's a trivia night.
No, you know what? The great thing about the VA is you have to be serving in the military 90 days during wartime, and that automatically qualifies you for it. What a lot of people don't know is, unfortunately, we do lose, military members for certain things. Either they during wartime accidents, you just don't know. So the great thing what a lot of people don't know and realize, Brian, is that their spouse can actually utilize their VA. It transfers over to them.
Nice. Okay.
So as long as you're married, not dating, if you're married, that automatically transfers to the widow.
Yeah, and I believe we had experience in the past where the wife is actually the one that utilizes the VA loan because the husband unfortunately is not with us anymore. And I think that's a very untalked about subject about the VA loan, that the surviving spouse is actually able to utilize that VA loan. So for those military people out there that didn't know that surviving spouses also get that benefit for the VA loan, make sure you share that with your people at home.
Yeah.
But moving forward, man, another question that I feel like a lot of people don't really know the answer to is, can I get a VA loan if I'm no longer in the military?
I know.
I feel like a lot of people are like, oh no, I can only use it when I'm I'm inactive, but I feel that's a huge misconception, Will.
It really is, and that's the power of knowledge, right? And just surrounding yourself with people that understand what you're looking for. If you don't find that personnel, you're not going to really hear it from somebody.
No.
It was just crazy to me because for us, it's like we've been doing it so long, so it's like we automatically think everybody else knows.
Yeah. Yes. I think that's a huge part of our industry that when we talk to people that aren't industry, we're just so tunnel vision in what we do every day that it's like, oh, you know what that means, right? And then when they're like, what does that mean? You're like, wait, what? But you do have to think about it that day in and day out, their life isn't revolved around real estate, isn't revolved around these, mortgage terms, real estate terms, or, day in and day out things. So I think that's a huge, shine of light on that subject that you are able to,
No, absolutely. It just, I just can't express it because it's like, as simple as something sounds, it's not so simple for others. And you're right, because they're so caught up with everything that they're doing. I mean, some of these personnels, they're managing thousands of people under it, so they don't got time to figure out if they can or they can't use this benefit.
No, and I think that's one of the biggest things where the trust factor really comes in, because just like they have a lot of people that are trusting them to guide them to the right direction, to guide them to the right mission, get them through it and everything. Like, they expect that from the people that they go into business with or partnerships with. That's our responsibility. Yeah. We're the captain of this ship. We're responsible for making sure that we make it through the beginning all the way to the end. So
I know. I mean, we had one of them. They served 28 or 32 years, and then he realized until we were a part of this organization called Reboot. It's for
yes,
transitioning
yes,
military,
yes.
getting out of the transitioning military personnel into the civilian world. And so they told us that this is something that they never knew. They thought that they could only use it when they were as active.
Yeah, no.
And that was crazy. I was like, whoa, what? We just got to get more people informed.
Yeah, and I was just having this conversation with one of my buddies the other day where it's like, if I knew that, right off of high school in 28, when I graduated, that I could do 4 years, get my VA loan, get the benefits, and then, leverage your BAH and BAS, I think I would have done, life a little bit different.
Exactly.
But I don't change anything that, happened, because then I wouldn't be here where I'm at right now. So, so I'm thankful for that. But
we are who we are because of our past experiences,
100%. And I just feel that, leveraging your BH and BAS is like here in San Diego, at least here in San Diego, or just high cost areas, like they're giving you a tax-free income, allowance every month to utilize that for houses, to utilize that for food. So I just believe that it's something that you should definitely leverage. While you're inside the while you're inside the military service and active.
Yeah. One of my, the biggest questions that I've been asked, and I've been just paying attention to what our clients are asking, it's like, that the VA process takes too long.
Ooh.
Because when we're putting in offers, even from realtors, they're like, VA loans just take too long.
So
that's a myth.
It's 100% a myth. And I'm gonna come back with you with another question is, do you feel that it takes longer because the person that's doing the loan may not understand it as much as maybe someone else that specializes in it? Because it's not like it's a complete different loan and it's completely different. It's just, has a different types of guidelines.
Of course, it depends on that, and it also depends on who you're utilizing, right? Here, the majority of people we represent, we're a local, smaller home type of brokerage. Right. Whereas when they go to these other major banks, maybe the major banks just have different processes and procedures they have to go through that cause a little more delays.
100%.
So, with banks, a lot of times the person taking the loan application isn't the actual loan officer, right? They're actually really not analyzing everything. They have to pass it down to an underwriter. Whereas the difference with us, we're analyzing everything. We're making sure, giving our client a reassurance that we do have a loan.
Exactly.
So we pretty much underwrite the file. So when the underwriter has it, we already know we got a loan.
Yeah.
Very, very different. So the process is much faster.
Yeah. So it sounds like, having the right approach and making sure you have all the information correctly up front is going to streamline and really make the process a little bit, faster. And I think that just goes for anything. If you have all your stuff in line, you're going to have a faster process. But I do agree that it's a myth because it doesn't take longer. On the contrary, we've closed VA files faster than some FHAs and VAs at times.
Oh yeah, 10 days. I mean, we've done it where legally you can close in 10 days,
100%.
and it happens. One of the biggest things is what does causes delays is not the loan origination process, but the appraisal process. And so a lot of realtors and people, we just think like, oh, they're going to scrutinize. An appraiser's there to make sure that there's value to protect the bank, the investor, and the consumer. Make sure that they're not purchasing a home that's overpriced. There's times we've seen this, that the home is selling for $850,000 and the appraisal comes in at $830,000. And so now what? Everybody's scrambling, right?
Yeah.
And this is part of the real estate world. Things happen. We think a home is worth X, but when the appraiser goes out there, they have a different opinion.
Yeah.
They get to visually see the home they're appraising, and then they go to other sales comparables around the area. Normally it's within 3/4 to a mile radius, and they have to compare apples to apples. And what I mean by that is bedroom and bath count, lot square footage, home square footage, all these things factor in.
I'm glad you bring those details up because I feel like a lot of people just see, oh, the house down the street just sold for this much. That means my house is probably around the same much. But it's those details, lot size, room size, square footage that really, comes and determines the price at the end of the day. So thank you so much for sharing that. That was actually really good.
They don't go into, they think that an appraiser is there to inspect a home. They're not.
No, not at all.
They're just there to make sure the value's there. That's why I always encourage everybody to have a good home inspector. So that may have a little bit of the delay.
Yeah.
And they're, rightfully so, they have 10 business days to provide us an appraisal. Not bad.
No, not at all.
That's for the consumer protection, which is not bad.
No, not at all. I mean, it's a protection. Make sure that they're doing the work. They're, taking their measures to be sure that, they accurately give you the value that you want.
All right. What about this one, Brian?
All right, let's go.
What about this one? This one it just gets me. But You have to be a first-time home buyer to qualify for a VA.
What? Like, hey, now they're just making them up at this point. That is a big fat no. You don't have to be a first-time home buyer. You could be second-time home buyer, third-time home buyer, four-time home buyer. It really just it doesn't have a limit unless you run out of your entitlement, which is a question for a little bit later.
I just had to throw it out there. It was one of those funny ones that I just kind of interest me. Like, really?
I got one for you.
All right.
Do VA loans require a down payment?
Oh my goodness, of course not. Of course not. It used to be, Brian, obviously you were a little chick before you got into the industry. But back in the day, there was county loan limits, and I remember seeing these county loan limits begin like at $350,000. And then every time it would go up, we'd be like, whoa. Right. And so we started seeing a big progression on these county loan limits after, I'm going to say, around 2014 and on. Mm-hmm. We just started seeing they started like really increasing, which is great. But as of 2020, they removed the county loan limit. Okay. Mm-hmm. So back in the day, I'm going to go back when there was a county loan limit. If you purchased a home, let's just say for $350,000. Mm-hmm. Okay. And the county loan, I'm sorry. You purchased a home for $400,000. Mm-hmm. The county loan limit was $350,000. Right. That $50,000 deficit, you would have to put 25% down of that deficit. So that's when it did require a down payment. As long as you were purchasing a home under the county loan limit, there was no down payment.
Interesting. So that's why I'm guessing a lot of people didn't want to do the VA loan because it was very difficult to, get them approved for an amount that made sense for them to be able to utilize their VA loan, let alone have to come in with the difference of money when you're like, hey, I thought I had a free and clear no down payment loan here. What's going on?
Yeah. So now as of 2020,
hey,
it's free range.
If you can afford it and the bank wants to lend on it, hey, it's free range.
2, 3, 4 million. Yeah, 2, 3, 4 million, whatever you want, no problem. 100% finance. As long as you qualify, you're good.
Crazy. Another one that I get a lot is, are closing costs free and included with the VA loan?
Oh, that's the best.
I get that one all the time. They're like, oh yeah, no down payment.
Now we. And I'm sure I can speak about this with other
other industry members, of course, And you know what sucks? As much as you want to tell them yes, and you're like, 100%, they're going to get taken care of. Like, it's always it depends, there's strategies in order to be able to get your closing costs covered. But in the regular way, you're responsible for paying your own closing costs out of pocket. And I think we always advise more than anything, if you have the money to come up with, your own closing costs, just go ahead and use your money. Unless you have a really good agent or a partner behind you that, can negotiate closing cost terms from the seller or make your deal enticing enough where, they're going to get covered by the transaction.
Absolutely. Teams matter.
Yeah,
your team
100%.
matters. Who you have around you matters. What experiences they have, what expertise they have in their market, it matters.
Yeah, no, definitely. I mean, I think it just goes like sports. Like, if you have a coach that is very good, their team's going to show that what he's teaching them is showing on, right? And it goes the other way as well. If you don't have a coach that's good, it's going to show as well. So who is definitely behind you is definitely a big propeller in your success.
Yeah, no. So to go back to that point, a lot of times, the common question is, well, then I could roll them in, because I saw one of my friends that rolled in his closing costs into his loan.
I hear that all the time.
And that's not the fact. They miss a lot of times when you're purchasing your home, you're so excited, right?
Yes.
So you miss the little details, or you miss the how they did that. And so you're like,
thank you. You said the how.
It's just like, it's not that they're rolled in. What happened is, I'm just going to use an example of what we do, right? So if they purchase a home for $800,000, the buyer's agent will negotiate. It's all the art of negotiation.
Yes.
Yeah. And so what happens is, we got to find what the bottom line the seller wants.
Yes.
So let's just say in this case, they have it on the market for $800,000.
Okay.
And, I'm going to call the agent and I'm going to say that you're my agent, Brian. I'm going to be like, Brian, hey, this is Will XYZ Realty. Mm-hmm. I see that you have this listing at $800,000. Will your seller entertain, a $780,000 purchase?
Right.
You're probably going to be,
okay, well, I'm at 800. I don't know.
Okay. So I'm going to go ahead and, Brian, I'm going to put an offer in there for $780 with a $20,000 closing cost credit, right? And so a lot of times you'll come back and you'll say not at 780, but if you offer me 800,
There you go.
I'll give you the 20,000. And that's how that 20,000 is financed in. And that's the misinterpretation of how people perceive that, oh, my closing costs were rolled in.
They were negotiated in.
They were negotiated.
Now, I love how you put that because it's meeting the seller where they need to be, right? They have a bottom line number.
Yeah.
And if you're able to give them still what they're looking for and it's advantageous for both parties, of course, everybody's going to walk away happy because they're getting what they want in a deal.
That's
As
it.
long as everybody feels like they got a deal, like everyone's happy. And that's the art of real estate. Everything's negotiable, but not everything's guaranteed.
You know what? I like that everything's negotiable. Everything is negotiable. And when you're negotiating the biggest investment you're going to make or purchase you're going to make in life, this is the time to negotiate. This is the time. What's the worst thing that's going to happen?
They'll say
is
no.
a no.
It's
right?
a no. Or how about this? And that's why I always encourage my clients, as long as it's not, abruptive, rude, ask for what you want. Let them know, because the worst thing they can say is no, or they're going to give you something relatively close to what you asked for, and you walk away happy because you could have got nothing.
Yeah, and that's why there's called buyer counter offer, right?
Exactly.
Seller counter offer.
That's a good one. You could counter back too.
They go back and forth until you find that happy medium where you can, now strike a deal and connect and get this thing wrapped up.
100%.
So just for me, I always say the least amount of money out of pocket, the better. That is leverage at its best.
100%.
Right? VA has the best. For me, it's the best home financing tool out there.
100%.
You know what I mean? And so for me, leverage it. For every $10,000 that you put in, it's right now in today's interest rate environment, it's going to be around $75 to $85 difference in payment. Brian, who's going to let you borrow $10,000 for $85 a month?
Nobody. Not right now. At least not right now, knowing how expensive money is.
Right? So it's not going to happen. So that's where we educate. And I know that this is something you do as well. But this is where we educate our client to leverage what they have. Mm-hmm. And the reason for that, because you can, with an ATM, you can go and get your money out.
Yeah, you're right. You have to pay a small fee, but did you get your money right away when you needed it?
Right. So if you put it all in your home, what does it entail to take that money out?
I mean, it's going to be a fraction of what it would have been if you went and did a personal loan or just, some other type of financing.
Well,
like
even going back to your home, because that's where you put your money in, right?
Yeah.
And so you put it in there, you have to go through the whole, getting approved again.
Yeah.
Income documents, work verification, all that other good stuff that goes into it. So I try to take the path of less resistance.
100% always. Another one, we work with a lot of young military couples as well, right? And we get a lot of couples that come in and, hey, I'm ready to buy a house, me and my girlfriend. Are we both able to utilize our income to qualify for this VA loan?
Nope.
And that's where we sometimes become Cupid.
You have to be at times, right? If it's going to work out, it's got to work out. Well, you guys are already thinking of buying a home.
I mean,
but absolutely not, Brian. To answer that question, you're absolutely right. We get a lot of that stuff. And so in that case, it would be, you have to be married.
Yeah, 100%.
You have to be married. But now, let's say you don't plan to be married and your girlfriend has a solid bank account.
Go there, okay.
Then, because remember, the VA guarantees 25% of that. Whatever the purchase price, they are going to be required to put a certain amount of money down because they are considered civilian, and therefore, in order for the VA to guarantee their portion, they have to put money down towards that purchase price.
Okay, so then...
And there's a formula for that.
Yeah. So if you guys do want to have a little bit more information and want the formula, definitely, drop a comment on the comments and say formula, and we'll reach out to you. Yeah.
There you go. Yeah. So it's that, or you just decide like, hey, you know what? I was planning to marry in 6 months, but now I really like this house, so I'm going to go to the courthouse and just do it now.
Yeah.
And that applies. It doesn't matter in community property states or not. This is just something that's required through the VA, so the VA guideline.
So, segueing into another question is, a lot of people think that rates are similar from FHA, conventional, and VA. Is that true?
Certainly not. It's certainly not. We already know that, lending, mortgages, and anything with lending, it's all about repayment, right? And so it's all about risk factors.
Yes.
And so the great thing about the VA is the VA, they actually guarantee 25%, right? So what does this mean, Brian? when somebody purchases a home, and I'm just going to keep it simple,
Yeah,
right?
yeah.
I don't know what areas have $100,000 home, but I'm sure there's some out there.
Yeah, and if you're going to bring up big numbers, I didn't bring my beans. So.
Yeah. We don't have Andy. But anyhow, if you're purchasing a home for $100,000 for this example, and the person defaults, meaning they can't make their payments, they lost their job, and these things do happen out there in the real world. If in case they default, the VA is going to guarantee a 25% to the investor that actually provided that financing for that client, right? So now the bank, we're at a loss of 75% of that. We get to put it back in the market, and just recoup the most
as much
of
as they
what we
can.
can.
Okay,
So
makes sense. So
that's how that more or less works.
that makes sense. So staying on that topic, a lot of people once they leave the military, they go to school and they get what's called a GI Bill, and then again they get BAH and BAS. We get people that come in and say, "Hey, I work here. I just left the service, and I'm also going to school. They're giving me $3,400, for BAH.
Yeah.
Can I use that for qualifying income?"
That's always good. Obviously, we say no.
I want to say yes, but I'm like, unfortunately.
But you can, yeah. We want to say yes. No, the only income you can utilize is something that you're going to be able to prove that it's going to continue for the next 3 years.
Okay.
What happens with the GI Bill, those student loans, is let's say they found their home, in March, right? And we want to qualify them, but they started utilizing their GI Bill just, last month. Well, by the time they close, they're not going to receive it for the next consecutive 3 years.
Meaning by the time they're done
By
with
the
school,
time they
they're not
close
gonna
and
have
all
that
that, it's not going to be available. So that's one of the reasons why we can't use that.
Wow. Okay. So for those that are using a VA loan to go to school, make sure that you're clear about
Get to work.
You're clear about knowing that you can't use your BAH for income on that end. So okay, that makes a lot of sense.
Here's the other thing is one for you that I've heard out there. Since I'm putting no money down to purchase my home with my VA, the interest rates are going to be higher.
So right off the bat, the way that your interest rate gets determined is solely by your credit and your credit score and your credit profile. So your down payment, your income really has not much to do with it. If you want the lowest rate, make sure you have the highest credit score. Yeah. If you want the highest rate, make sure you have the lowest credit score. But who wants that?
Yeah, but what makes the VA great is that it's because it's guaranteed by the VA. I'm sorry, I was going to say by the VA. Well, the beauty of that is that they obtain better interest rates.
100%.
When you're going with conventional, you're required to put a minimum of 3% down, all the way up to whatever you want to put down, right? And then you'll also have what's called as mortgage insurance.
Why do I have to pay this? What is it for?
Again, that's to protect the investor.
It has no protection for the client or the homeowner. Unfortunately, it's all just a safety rail for the bank.
Right. So. Yeah, no, the rates are actually in your favor. VA, even with lower credit scores, will still be favorable for a veteran or an active service woman or man, with the lower credit scores than a conventional would be.
100%. That difference in your credit score, you can have a lower credit score and still obtain somewhat of a fair rate.
Yeah.
But with conventional FHA, it's all credit based. If you don't have the credit, you're gonna be subject to a higher rate.
Yeah. What about this other one, Brian, where they talk about, can I have multiple VA loans? I know you've seen this quite a bit.
Yeah. So interesting, and it kind of goes with what you said earlier with the county loan limits. So when you have a house, let's say here in San Diego, you purchased one before you got married or before you started a family, right? You got a condo, and then all of a sudden 2 years later, you're like, oh wow, I met a girl. We want to get together. We need a bigger space, and now you want to buy a bigger house, but you're like, hey, I kind of want to hold on to this property because I feel like I could rent it out, or I could still leverage it. So you're actually able to do another VA loan while still having your VA loan, as long as you play within the county loan limits. And now they actually come back and play a part. Once you have two VA loans, or you want to use your VA loans subsequently, you then have to play under the county limit loans of wherever you're at or wherever you want to purchase. Yeah. But just like you mentioned, if there's a $50,000, $100,000 difference in in the amount that you have to come up up with, you only have to pay 25% of that difference. So you don't have to come up with the full amount. And just to cut it short, you can use your VA multiple times as long as you have entitlement left and you stay within the county loan limits.
Yeah, I love it. I love it. I have a great example. I have a great example. I have a client that purchased in South Carolina because he was stationed over there. And we're talking about, this is for one of my boys. And he had purchased that condo for like $140,000. Mind you, this is when the county loan limit did exist. Okay. We're talking about 2012-ish, more or less.
Yeah.
So then he got stationed here in San Diego. I helped him get a property here in San Diego, 100% financing, because the county loan limit was much larger. Right? At that point in time, he was only using 140, 50, I think is what it was.
Minuscule amount.
So here he ended up buying for like 3 and change. By that time, the county loan limit was much higher. It was like in the, I want to say like the 5s more or less. I wish I could remember. I don't remember what I did last night. But it was around that. And so he was able to purchase that. And so he had 2 VA loans, and he never realized that. He was like, hey, can I do that? He was already ready to, put money down. I'd go, no, let's see if we can use your VA. And we did. We got his VA entitlement. We got to see what was, and his entitlement left over. And then there's a formula that's applied to figure those numbers out.
Yeah.
So he qualified. The next thing we know is like, well, I'm leaving. Can you represent me in, oh my God. Why am I drawing a blank here? My wife is there. From Guam.
Yeah, I was just going to say that. Yeah, he went to Guam. So the motherland.
Yeah, so he goes to Guam, and obviously I'm just approved here in Cali, but there what happened is he purchased a 2-unit property. So the county loan limit was higher for that 2-unit property, and therefore he was able to go into that 2-unit property with no money down.
Talk about leveraging the county loan limit.
So
just played right under the rules.
So to answer that question, that's an example that I can use that we've actually have experienced. We've seen it go through. And I'm telling you, this guy's just building wealth.
Yeah. And, it just fathoms me how, a lot of people fall into the myths and they take it for face value.
That's
it. Like, oh, you know what? Someone that was just like me, he said, no, you couldn't do it. Okay, cool. I can't do it. But there's information out there, and you have the tools to, really research. And I think with the VA, we were having a conversation the other day with one of our partners, Anthony, and he was saying the VA has such gray area, guidelines that sometimes, it's very easy to be able to, do something that you didn't think you can because of the way that you present it or the way that, you understand the VA loan and what you're able to do under the legalities and make sure everything's good. You're able to do a lot more that a regular loan wouldn't let you know. So, it's just knowing your products, knowing how to, use your VA loan that's going to help you, set yourself up for success.
Here's another benefit, kind of segueing into it is our VA loans assumable.
Ooh, yes. And I get that. So there's a huge argument. I feel like last year it was very popular because everybody's like, hey, 2.7 rate, assume it. But that also entails with the whole, process it's in itself. It's not just, hey, let me take over your loan. Cool, let's go. You also have to approve under their terms. You have to make sure that you give the seller what they want. And that's the biggest thing. If they have a 2.75, but their house is worth, X amount, and they have all this equity in there, they think they're just going to walk away and leave you their house.
Yeah. So what you're saying is it is an assumable loan, which is a good benefit. It's a huge benefit, right? Brian, so what you're saying in this case,
you can do it.
Yeah. And if I'm the seller, right, and this is a lot of what people don't understand, and you can clarify this, is so I'm the seller and I'm selling my house for $800,000.
Yeah.
But my loan is only for $500,000. What happens in that case?
Well, that's where the negotiating comes into place. You got to understand what the seller wants. Maybe he doesn't want that full amount. Maybe he's okay with 150, one half. So that you have to understand the pain points, know what they want, because that's the only way that they're going to want to, make that exchange. They got to have to get something value for value. Obviously you want the low rate, but you don't think they want their equity as well?
So we're talking about how do we bridge that gap, right? But in this case, what happens is the only amount that you could assume would be what the bank
basically is, what the loan amount is basically left on there.
The balance.
Yeah. I mean, the seller might want, the difference, but that's
something that you can work.
You can put it apart.
So in other words, you're just going to assume the current terms and conditions of the remaining balance of that loan. So in this case, in this example, would be that $500,000. If the rate's at 2.75, that's what I'm going to assume. the other 300,
You have to
yeah,
negotiate it. Yeah, I guess.
but most people want that 300, right?
Yeah,
It's
so
like,
I guess to clarify, you can't roll in that spread into your loan and then buy the house for the
Yeah.
value that they want it when the loan amount is, lower.
you know what's crazy is last year, I'm going to say around November, the VA brought out the letter stating that they're okay with doing seconds. We still haven't found out. So that's another good thing, that's a good way to bridge that gap to still keep it at 100% financing. You know, which is pretty cool. When are these these seconds gonna go out there? We'll let you know.
And you'll have to subscribe, put on your notifications because we'll be talking about it when it comes.
It's coming. Once one big major bank implements it, you'll start seeing everybody. But for now, that's the hard part on an assumable loan is bridging that gap.
Yeah.
Now, if you're back east, not back east, but mid
in the lower, less expensive
Alabama,
market.
yeah, exactly.
Yeah.
Where Virginia used to be pretty common. I remember a couple of clients went through it. They're like, houses they're not selling. And I'm selling it for $250. So another person that would get PCS there would actually just assume the same terms and conditions of that loan, which is not bad. And that's a way to avoid, any other additional fees like realtors, closing costs, escrow titles, and all that stuff that goes into it.
Yeah, and I mean, it's easy for them just to, get approved real quick. I mean, VA to VA. I'm sure it's a lot easier.
Yeah, exactly.
So another misconception and myth that we get a lot is, can I use my VA loan to refinance?
No. Straight no. No, of course, that's the beauty with VA, Brian. As you know, we've done a ton of what's called an VA EARL, and that stands for an interest rate reduction refinance loan. And so the great thing about that, it requires no appraisal. It doesn't require any income because you're benefiting from the lower rate. And since you already are qualified at the higher rate, the VA just simplifies the process for our veteran or active and, women, active servicemen and women. And so that's the beauty of it.
Yeah, no, it's a very, last year in September, we were able to help a lot of clients that, picked up higher rates the year before. And, it really just streamlines the process, makes it very quick, accessible, and they're able to just, reap the benefits of the saving money on the rate.
No out-of-pocket expenses. You know.
Oh, and then sometimes they get their escrow balance back. So like you said, it's kind of like a mini cash out depending on what you have in your escrow account. So
it just, again, who's doing your refinance, how they plan it, what they're paying attention to the consumer, of how they're setting them up for success, right?
And I love that we always break that down to the clients when they, when we do the refinance, like, hey, you're gonna miss 2 payments strategically if we close on certain times. Then you might be able to get your escrow refund, and that in itself is a nice little chunk of money that they're able to save.
Correct.
Going into.
And it's like you're missing the payments because we're always remember there's no such thing as a free lunch, so I don't want to put that out there.
No.
What it is, and when you're doing your closing costs, there's such a thing that's called prepaid interest. And so depending on the day that you close, what'll happen is we're going to prepay for those days. And remember, when we're making mortgage payment, it's in arrears. So when you send your payment out, well, we already know that.
Yeah.
But when we send our payment out for February, it really was for January.
100%.
So it seems like you're skipping payment, but you're really not.
Yeah, I just like to tell them you're skipping the payment.
I get it. No, because it does feel that way, right?
It feels like that.
It does, but we don't want to. Yeah.
No, I completely understand. It's just, easier terminology.
You always have that person out there that's just going to be.
Really? I'm like, go ahead. Tell me in the comments.
But those are things that we strategize. The other thing that you strategize with is a lot of times here in California, they have escrow balances of anywhere from $8,000 to $20,000.
Yeah, property
and
taxes
when we're saying that's the property taxes that they're paying on 1.4, 1.6, they want $2 million property. And we tell them like, Brian, would you like that money back to go to you? And then we just put it in, closing costs for the next month, whatever. But at least you get that to pay off a credit card that has a higher interest rate. What do you want to do? Or we just reduce that from your current loan amount.
Yeah.
And so most people choose to do the
little cash.
We call it a mini cash. Yeah. Let me take that. It is what it is.
So here's what I feel is like one of the heavyweight questions of, the VA loan. And a lot of people would argue against it. Other people like to get creative. But can I use my VA loan to buy a second home or investment property?
Yeah, that is such a good question, right? That's just kind of puts you like a head scratcher. Well, wait a minute.
And if so, what's the maximum amount of units I'm able to buy?
Yeah. Exactly. No, I love our story here that we put on, on this, not a story because it's actually.
It's a success story. I think, being able to share an actual story that one of our clients went through. And the funny thing is that they never thought they were going to be able to do it, just being confused and, hearing things that, weren't leading him to where he wanted to be. I just think having the right team behind you is honestly the key to, being able to, build wealth and then from there take off. So I want to really just, get into this and.
No, I love it. I love how you put it right here, Brian. You're out like from barracks to building wealth. How one veteran used his VA benefits to change his life. And you know what? You couldn't have put it better because this did change that veteran's life.
Yeah, 100%.
The way he the way he perceives everything now, the way he looks at everything is like, you remember when we first met him, it was just, everything was just like, no, that ain't going to happen.
Negative,
and next thing you know, once that lipo went out, it's like his eyes blew up and he's just like, what?
Wait, you're telling me I
don't
do
have
this?
to. Yeah, no. His first thing was like, I can use it for 4 units. How does that work? Right. So I loved it because he's now an investor. He looks at everything as an investment. Whereas when we're first looking for homes, Brian, what does everyone look at this home?
With their emotional eye, like, I don't like those cabinets. Oh, the color of the carpet. Oh, the wall. Like, I don't want to buy this. But they're not looking at it from a different lens of like, well, hey, could this grow in value in 2-3 years down the line?
Or this is my forever home. Oh my God, it's my first home. You're so emotionally attached, not realizing, proven statistic, you're either going to sell, refinance, or do something with that home in the next 4 to 7 years.
So after a client was just like, hearing, myth after myth. No, you can only use it once. You can't buy multiple units. You can only use it while you're active. He found us. And that's when, it really started to all, come full circle. Yeah. Switching the mindset is one of the biggest things that we carry ourselves around here at Mortgage Heroes. And then let alone being able to pass that on to our clients and letting them know, hey, like there's a lot you can do and you're in the best position to make it happen. Yeah.
Like we say, our boy here, we love him because it's like, again, he retired. He had one of those myths that had to be, his forever home, or, he just went with the myths, or I can only use it once. I can only buy a single family residence. So it was just cool to see, that he realized it. I mean, I know it took him, what did he serve, like 28, 29 years after realizing this information was crazy.
Yeah.
Right. So the cool thing about that is once he understood the VA loan, he understood that all those things were just myths.
Yeah.
So we ended up getting him, and instead of assuming the myths, he decided like, you know what? I'm just going to get it done.
Yeah.
So what was cool is he got together with us, VA loan specialists, and we connected him with a VA realtor specialist that understands, he was prior military. So they spoke the same language and they understood each other and they just helped each other out, right?
100% brother to brother.
Yeah, exactly. So one of the things he ended up purchasing was 4 units.
Let's go.
It was like 4 units.
Yeah, that's crazy.
Like he didn't go for a single family. He wasn't just thinking, I still have my 2 kids here. I'm just going to go with the single family. I don't know what it looks like. But once he understood, the power of leverage of utilizing the other 3 units to help him, make that payment, it was great. And it's not like we went from a home purchase of just like at that point in time, they were like, I'm going to say like around $850-ish.
Yeah.
Instead, with his 4 units, once he realized he just had to occupy one of the units out of the 4 and rent out the 3, and we can utilize that income to help qualify, it was just like a big eye opener for him, right?
I think that's the biggest like aha moment when you say, wait, I can utilize the unit projected rental income to then qualify for this. Wait, what? Like, and honestly, that's one of the only loan products that allows you to utilize the rental rates for qualifying income without having that experience.
Exactly.
That's that in itself landlord is such experience. A huge key, because if not, you somehow have to like rent a room to somebody or have some sort of experience to be able to then qualify for that rental income. But with the VA, right off the bat, you're able to leverage that because of the benefits that your VA loan comes with.
That's a great point. Yeah, the landlord experience is one of the things. And so the other misconception to him was that VA offers weren't actually competitive on the market. You know, because there was times where when he was working with the prior team with that, they didn't understand all this stuff. So he was having, I remember, just headaches. Like, bro, I don't even want to buy a house.
So
I'm done.
One of the things I've heard, and I feel it's not to anybody's fault, but it's like you can't FHA a VA loan, meaning that just because they're two government products, they're completely different. And I feel at times, they can be like, oh, well, FHA does it like this, so VA can't do it as well.
That's correct.
But that's where, the professional comes into place, where you have to know your stuff, and the person that's guiding you should give you the confidence that they're able to make it happen. So it's little things like that that really matter.
Yeah, absolutely. The other thing we didn't talk about, the some of the benefits that people look at that's not a benefit is the VA funding fee.
Oh.
We didn't discuss that. But anytime that you're using your VA benefits for the very first time and you're active, or if you're a veteran and you departed from the military and there was no disability, there's going to be required what's called a VA funding fee. And so that funding fee for a first-time use is 2.15%. And then there's also what's considered the subsequent. Right. And that would be the 3.3% that's there. And that gets financed into the loan. A lot of people think the misconception, the myth is that you have to pay that up front. And that's not necessarily the truth on that.
Yeah. I've had clients like, why is there a $11,000, $12,000 fee on my loan estimate? No. That one gets, tagged into the loan. It's the VA funding fee. But if you collect anywhere from 10% or more in disability, once you become a veteran, you never have to pay that funding fee ever again.
It's waived. So in our case here with our boy Carlos, it was he ended up purchasing a home for $1.4 million.
Nice, okay.
Which was phenomenal.
Jesus.
And then 2 of the 3 units. So he occupied. You always have to occupy the bigger of the all units. So in his case, he occupied the 3-bedroom, 1 bath, right? And the other units were 2 bedrooms, 1 bath.
Okay.
So out of the 2, I believe I want to say he rented it was like $2,100. And then one of the larger ones, he was able to get like $2,400 because it was a little larger.
Yeah.
Right. So, and I went back to the story here, but he ended up renting those 3 units for $6,600.
Oh, wow.
Right. Do you want to know, Brian, what his payment was?
What was his payment?
Because he bought this back in 2021. So rates were at 2.875.
Okay. So 1.4, what? Maybe like 6,000 and change?
I wish. It was like $7,600.
Okay.
So if you do the math, really he's out of pocket on a monthly basis is $1,000. Yeah. Like that was leverage. That was just like for him, that was a huge eye opener.
Wow.
And so fast forward, he realized that I don't have to be a first time home buyer to qualify this. Nope. That myth is gone, right? My loan is competitive. Right, because I was able to get into
and
this.
We don't take longer.
And he's knew that I don't have to just buy a single family residence. I bought a 4-unit property, right? And so I want to give kudos here to your team matters because that realtor that presented that offer, it made sense to the seller, and they went, over other offers. So it was just beautiful. Now we fast forward. I remember it was like about a year. He's like, Will, I'm ready.
It's time.
What do you mean? What are you ready for? I'm ready. I'm having another kid on the way, and we're growing out of this. It's a 3-bedroom, 1 bath. I need more room. So
backyard space.
Can I buy another one? So what we did is since you're already thinking about that, why don't we just go and refinance out of that and put your home into conventional?
But why would they do that, Will?
Well, the reason why I want to do that is to free up his VA, because even though there's no county loan limit, right? The VA loan limit at that time, I want to say was like 900 and change, right? And if he bought that for 1.4, it's attached. Right? So we had to get creative and figure out a best solution to have him leverage his VA and not put any money down again. Right?
Yeah.
He just because he's got an asset that's paying pretty much the mortgage on itself doesn't mean that he's got liquid funds. So in this case, I want to still go with no money down if I can. And how do I do that? Well, we found the solution. Obviously, his payment increased because we went to conventional financing. The property had enough. It had more than 20% in this case. So he had no mortgage insurance, conventional financing, higher interest rate. But now he's still cash flowing because remember that first unit, that 3-bedroom, 1 bath?
That was the biggest one.
That's the one that now he was renting for like $3,400.
Offsets everything.
There it is. So it's like he's not making a lot of money, but the property is paying on its own and it's earning equity every month.
And I feel more than anything, he cracked the code. Like he understands now. He's like he knows like how to go out there, redo the process, and now it's just taking the time to really.
No,
just get out
it's
there.
awesome. I even put right here. I ended up putting here that he knows how. You said he broke the code. I put he understands the rinse and repeat method.
100%.
Right? Because now he's at his home. He's closer to what he wants to be with the schools. His kids are there. He ended up buying a 4-bedroom, 2.5 bath. It fits his family. It's all good.
Yeah. One of the things that I will advise is that, go with who you feel comfortable. I feel like, when it comes to the VA loan, you want to have somebody that can talk to you like a brother. And I feel sometimes it's more relationship than like a business transaction, because of the fact that it's like it's a lot of these people come with families. They're coming from overseas. They're here a very short period of time, so it's a very intense process. And on top of that, they still have to go and do their whole life. So I really just I really push it that having the right team, realtor, lender, is going to be one of the biggest keys for you to just feel like you're taken care of.
Yeah, and I mean, because of that, for my birthday last year, I made the move of the company because I wanted to be of more of a better resource and service to my clients that are moving, like Guam.
Yeah,
I wasn't able to do anything over there. I mean, still can't.
Yeah, I was like,
because we're not in Guam, but we're approved in 44 states now. So now when our clients are PCS, and I just had one that he liked our services, he sent me an email. I'll show you. And he's like,
I believe you.
I'm here in San Diego, and I'm right now in deployment. I'm gonna borrow Tennessee is where he's going.
Oh, okay.
So I asked him, like, what's the price range? What are you thinking of doing with the house? Well, I'm gonna sell the house, and I'm gonna go to Tennessee, and I want to live. Well, now we can represent over there.
Yeah.
Now we can assist with that. So I love it because this is something that our boy Carlos was in regret. And I told him, never regret your past. Just, keep learning and keep moving forward, 100%. Right? But one thing that he realized is like, if I would have every time I PCS, I could have used my VA and done this. The rinse and repeat right here. When I was in my earlier ages, instead of just partying, I could have made a sacrifice.
Yeah.
I could have had multiple homes. And when he's saying multiple, he's like, I had probably PCS like 4 or 5 times. You could have 4 or 5 homes in other states.
Yeah.
You know what I mean?
100%. And I think anybody that listens to this right now, just, don't take that example with a grain of salt, because taking the risk, doing the do and moving forward. I mean, look at our boy Carlos. I mean, he's ecstatic. He's in a great position, and I'm sure he's only getting started and wants to, just go out there and do more.
No, yeah. This is what he says, right?
So our boy finished off by saying, don't let the myths keep you from using what you've earned. I want to say that again. Don't let the myths keep you from using what you've earned. The VA loan isn't just a home loan. It's a wealth building tool. It's a wealth building tool.
Just drop the mic there.
I'll see you guys next week.
But there it is, B.
I mean, we'll see you guys next week. Thank you so much for tuning in.
Yeah.
Now, thank you so much for tuning in, guys. Again, it was a pleasure. Just, me and you, Will. Andy, I'm so glad we didn't talk about any numbers today. Just kidding. No, we love Andy. But
we do.
Like always, guys, make sure you please subscribe, hit that notification button, and share this with somebody that, could utilize their VA loan, that might be caught up in the myths and doesn't know where to go. Share this with them. Let them know that there's light at the end of the tunnel, and the mortgage heroes are here to save the day.
So like they say, knowledge is power when applied. Right?
100%.
So there it is. We hope that you really enjoyed this. And just give us ask some questions out there, whatever you guys feel.
Yeah, if you guys have any questions about the topics we talked about, or any questions that we didn't cover, directly send us a message if you get this on the newsletter. But if not, drop a comment and we'll definitely reach out to you guys. Want to make sure that you guys get all the information. And thank you so much for tuning in. We'll see you guys next time.
Yeah. Bye. See ya.
If you enjoyed this video and you want more of our content, subscribe here. And if you'd like to watch another video right now, click here.